There are a lot of documents that go into you buying a home. One of them is going to be a loan estimate. It's going to look really similar to the closing disclosure that you get towards the end of the home buying process as well. So you can use this to help reference and break either one of these documents down. A loan estimate is a federally mandated document basically disclosing to you the cost that it's going to come into play with buying a home. So Section A is going to encompass origination, underwriting, and any discount points. If you choose to buy down your interest rate, you're going to see a cost for it there. These fees vary lender to lender, so be sure to compare. That's actually one of the most important sections to really compare if you're shopping around with different lenders. Section B encompasses things like processing fee, credit report, appraisal, verification of employment fee. Some of these fees will come into play, some of them will not. Oftentimes they'll be disclosed at the very beginning, and some of them will come down or fall off completely at the end of the process. So don't be shocked by that. Section C is where you're going to see all of your title fees. So typically in the state of Colorado, the seller and listing agent choose the title company. And title company fees vary from title company to title company, but they're all pretty similar in cost. So these fees are going to come directly from the title company. When you are looking at a loan estimate, if you are comparing it to, two different loan estimates, two different lenders, just know those are only estimates. At the end of the day, it doesn't matter which lender you go with. The title fees are going to be exactly the same at the end of the day. Section D is actually going to just add up all of those items for you. Section E is actually recording and transfer fees. These fees come from the county. The title company actually are going to let us know what those fees are. So again, those are oftentimes estimated high on a loan estimate, but they will come down a little bit a lot of times on your final closing disclosure. Section F is the setup, or it's prepaid escrows. So on a purchase, it's very common to set up an escrow account. An escrow account is basically a savings account that's tied to your mortgage. We're actually going to collect 15 months of homeowners insurance, and that's because a 12-month premium is going to be paid to your insurance company from your funds to close. And then another 3 months is going to go into Section G, where the setup of your escrow account actually happens. And it's the same concept with your taxes, only with your taxes on a refinance, we'll collect based on the time of year and how many months that we need to actually have, so that next year when taxes are due, there's enough in your account. And then the setup on a purchase, the setup of your tax portion of the escrow account, we typically collect anywhere between 2 and 4 months, depending. Section F is going to be the miscellaneous fees. So sometimes you move into a community that has HOA fees, and they'll have HOA transfer fees or condo fees or things like that. You'll see those fees in this section there. Otherwise, you just won't see any fees there at all. Section I is the total of E, F, G, and H. Section J is another one to actually really look closely at, because sometimes you're able to get a lender credit. And there are lots of ways that this could happen, or reasons that this could happen. But if you were going to receive a lender credit, this is where you're going to see that credit is in Section J. One of the most important things to really remember when you're looking at a loan estimate, especially if you're comparing it to a loan estimate from another lender, is to really look at and break down Section A and Section J. Everything in the middle, all those numbers in the middle, whether it's title, document, recording, appraisal, any of those numbers, the setup of your escrow accounts, those are all actually going to be the same, regardless of which lender you choose. Minus, one lender might have a credit report that's $80 and one lender might have a credit report that's $85. So there might be minor differences, but for the most part, all of those fees in between A and J are the same. Where you're really going to see differences and be able to compare is looking at your interest rate, seeing the cost for it in Section A and a credit for it in Section J. Any of those items, that's how you're really going to want to look at your loan estimate.